Alright, we've talked briefly about allocating overhead cost to inventory, but I want to expand a little bit on that and go into a little bit more detail of how that allocation is actually done. So let's say that we want to produce this race car. We know we're going to have direct material costs. Say our direct material cost is 100,000, and then we also know that we are going to have direct labor costs because someone's going to put this car together, and say our direct labor for this car totals 50,000. And then we're also going to have overhead costs, right? And as you remember, our overhead costs are all our indirect costs. Our direct our direct materials are directly traced to the car. Direct labor is directly traced to the car, but anything that we cannot directly trace to the car is going to be overhead. So this is going to be things like our factory, the equipment we use, security for the factory, maybe the factory manager's salary, so and so. And we have lots of indirect costs, and we can call all of that indirect cost of overhead. Let's say our overhead for producing these cars is 150,000. So in this example, figuring out cost per unit or how much it's costing us to produce one car is pretty simple. Let's say that during that period we produced 50 cars, and we're assuming that all of these cars are identical, so we produce 50 of the same kind of car. And so we just would take our total product cost, which is direct, which in this case is 100,000 of direct materials plus 50,000 of direct labor plus 150,000 of overhead, so that totals to 300,000, which is our total product cost, and we just divide it by the number of cars produced. So divided by 50, and you get 6,000 per car. So it's costing us $6,000 for a car. So in this case, we ended up with just allocating this $150,000 overhead equally across the 50 cars produced. And that was because the 50 cars were identical. They were all exactly the same. But generally, the allocations are not that simple because often in a factory, we're producing more than one type of product and two more products, and basically two products which aren't identical. And so we shouldn't allocate our overhead evenly. We need to come up with a different kind of allocation method. So let's look at an example where we have two different products produced in the same factory. So let's say that we're still producing cars, but now we're going to produce two cars in one factory. The first car that we're going to produce, let's call it car A. And let's say that for direct materials, car A uses 3,000 in direct materials, and car A also use 1,200 in direct labor. And now we know exactly how much direct materials and direct labor were tied to the car A, because remember, direct materials are directly traceable to the car. So it's really simple to figure out how much direct materials and direct labor we've used. And then let's say that this factory also produces car type B, and then say that car type B use $1,000 in direct materials and $800 in labor. And again, we know these amounts because direct materials and direct labor is directly traceable to the car, right? And so we know exactly how much were used for type car A and how much were used for type car B. But then we have overhead for the factory, so we have to have overhead for these two cars as well. Let's just say that our total overhead for producing both the cars in total is 4,000. So we need to decide how much of this overhead should be allocated to car A and how much of this should be allocated to car B. And you can see that that they use different kind of materials and different kinds of levels of labor rather. So we probably don't want to allocate this 4,000 evenly. We need to come up with a different allocation method. So what we want to do is we want to decide, well, what's driving this overhead cost, and if we can figure out what's driving this overhead cost, we can use that to allocate overhead to A and type B car. And as we go through this class, we will go through many different ways of allocating overhead, and you'll see that there's advantages and different kinds of disadvantages as well to different allocation methods. But for this example, let's just say that we decide to allocate the overhead based on direct labor, and you could justify that by saying that more direct labor hours that you're spending on the car, the more time the car is spending in the factory, and so the more overhead should be allocated to the car. I mean, you can make that simple justification. So if we decide to allocate this overhead based on direct labor, we will be looking at total direct labor, which is 2000, 1200 for A and 800 for B. So our total directly was 2000, and we just take the total direct labor and divide it to our total overhead. So this 4000 divided by 2000, and you get $2 per direct labor dollar. So what that basically means is that for every dollar that we spend on direct labor, we should allocate $2 to overhead. So for car A, we spent 1200 on direct labor. So we should take 1200 times 2 and allocate 2400 to overhead. So that was 1200 times 2, and then for car B, we're going to take the 800 directly or multiply that by 2, and we will allocate 1600 to car B. So we allocate 2400 of the overhead to car A and 1600 to car B, and that totals to $4000 of total overhead. So you can see that that's one way that we could allocate overhead. We could allocate overhead based on direct labor. We could have done the same thing and allocated based on direct labor materials, or we could have come up with something completely different kind of allocation method. But the idea is that we want to find out what's driving the cost, and we have to come up with something and then allocate based on that. And so our total cost for car A, for the total production cost, would be 3000 of direct materials, 1200 of direct labor, and 2400 of overhead. And that would total to 6600 for car A, and then for car B it would be 1000 of direct materials, 800 of direct labor, and 1600 of overhead to produce car B, and that would be 3400 for the car B. So you can see the cost of 6600 to produce car A and 3400 to produce car B. This is the total product cost to produce these two cars, car type A and car type B. But one thing I want you guys to be sure about is that is I hope that you understand that this is what we need to consider more than just a total production cost or just a total manufacturing cost when we are deciding how much we should sell a car A or how much we should sell a car type B for. What I mean by this is that if you think about this, if you think about the cost of the car A, we know that the product cost is 6,600. So our product cost, which is our direct materials, our direct labor, and our overhead, is 6,600. But it's going to cost more than just the product cost. That's the cost of producing the car. We also have to design a car, and so the design cost is going to be called upstream cost. And for example, this would be like research and development. So we had to pay some engineer to design the car before we actually produced it, and maybe let's say our upstream cost of say that per car works out to be around $1,000, and then we are also going to have to downstream the cost. And there's going to be things like advertising. Again, you have to advertise this car to your customers who will buy your car, and maybe there'll be a downstream cost per car of a total $1,000. So we are thinking about making decisions. You can see this car is really costing us 8,600 to produce if we consider our upstream cost, our product cost, our downstream costs like advertising. But the only thing that we put in the inventory is this product cost. So this goes into the inventory. The upstream cost is expense, and this downstream cost is also expense. So our inventory just shows our product cost, just as 6,600 per car. But if a manager is making decisions, they need to consider the upstream cost and the downstream cost, and you consider those two costs. And when you consider those two costs, you can actually see that the cost is 8,600 to design, produce, and sell one of these cars. So we want the sales price to be greater than 8,600. Otherwise, we're going to be losing money on these cars. So you want to consider all these different types of costs, but the only cost that actually goes in the inventory when we spend the most, where we spend the most time talking about is the product cost right here. All right, the last thing I want to talk to you guys about in this video is how we handle product costs in a manufacturing company versus servicing companies. So we just saw how we handle product costs in a manufacturing company, and that's an example we did, which was about producing a race car, and we knew what we had and we knew that we had direct materials, direct labor, and overhead. And we said all of these costs, when we incur them, they go and do inventory. They go into the inventory, and we've seen an example of that. And then once this inventory is sold to the customer, it can be expense, and it's expense as cost of the goods sold. But what about a service company? Let's look at a hospital, for example. If you have a hospital, um, uh, so the hospital doesn't actually produce a product, right? They just produce a service that takes care of the patients. But they still had direct material costs, and they had to pay for bandages, medicines, and things like that. And they had direct labor costs that they had to pay to the doctors that did the labor. And they had overhead costs as well. They have the actual hospital, all the equipment that they have to use. So they have direct materials, direct labor, overhead, just like a manufacturing company. But it's handled very differently because they don't actually have a product that they produce, and they can store and they don't have a product that they have to store in an inventory. So direct materials, direct labor, and overhead for a service company is just um, expenses like selling and admin. So so know that when we are talking about service companies, and when we're talking about the cost of service, costs that a service company incurs, those costs are just expenses because they don't produce a product. So it will never go into the inventory.